Hello everyone, this is Svetlana from Marco 7th. Thank you all for attending today's webinar, Intelligent Inflation Predictions, Driving Finance Scenario Planning Within Your Organization for Building Resilience, brought to you in partnership with Jedox. Before we begin, I would like to cover a few housekeeping items. As you can see at the bottom of your screen are multiple application widgets you can use. All the widgets are resizable and movable, so feel free to move them around to get the most out of your desktop space. If you have any questions during the webinar, you can submit them through the Q&A widget. We will try to answer as many as possible during the session, but if a fuller answer is needed and we run out of time, we'll make sure to follow up with you in a separate email after the webinar. A copy of today's slide deck and additional help materials are available in the resource list. We encourage you to download any resources or bookmark any links you may find useful. For the best viewing experience, we recommend using a wired internet connection and closing any programs or browser sessions running in the background. You can find additional answers to some common technical issues located in the help widget at the bottom of your screen. Please expect an email within 2 hours after the webinar with links to download the webinar slides and recording. At this point, I'd like to briefly introduce you to our moderator and host of the webinar, Andreas Simon, Middle East Director at Jedox. Andreas, it is over to you now.
Hello, thank you very much, Svetlana. Very pleasure to host again another webinar together with you. And I'm really excited about the topic, intelligent inflation predictions, because that is what affects us all at the moment, driving financial scenario planning within your organization for building resilience. That is exactly what we would like to do. When I look at our panel list, we have exciting people here with us. So I can, ladies first, I must say, Adele Liu, who is from Ernst & Young. Adele, please, can you present yourself?
Thank you. Hi, my name is Adele Liu. I am a financial accounting advisory partner out of Singapore of Ernst & Young. I specialize in finance transformation across a lot of finance processes. Particularly today, I'm happy to share my experience in working with many large clients on their FP&A journey, some of those challenges and how you can overcome those challenges.
Thank you very much, Adele. Great to have you here in our panelist. As a second person today, we have Ahmed Dawood here. Ahmed, are you already? He had some technical issues to connect, but I don't know if he's now available. Not at the moment. So Ahmed Dawood is joining us in a second. He's a CFO from in GCC from Levant Foods about PepsiCo in KSA, so in Saudi Arabia. Unfortunately, Soon Lok Chon, the finance director from Adidas, could not join us because he got sick and is not able to join us in that meeting today. So looking a little bit about setting the scene, I would say, setting the scene for the topic today is the current economic environment, a landscape that is constantly in flux, sparks fears of global recession. That is the topic at the moment. And we see that Europe set for another rate hike as price surge. We know what we have in Europe. We have a war between the Ukraine and Russia. And based on that, we have energy crisis, means energy prices are super high and in supporting a high inflation rate, I must say. Asia's economic faces weakness growth, rising inflation pressures. We have the situation that euro returns to parity versus the dollar. And it's not even parity, it's below the parity at the moment. And we have high interest rates which are going up because to prevent high inflation, especially from America and Middle East, North Africa face high inflation at 14% in 2022 on account of Russia-Ukraine war. So we see that not only is inflation a global issue, but interest rates are also on the rise, and a lot of countries are seeing big movements in FX rates against the US dollar. So the economic environment has changed substantially over the last year, and many indicators are pointing towards a recession as we work to tame interest rates. So it's a very, very high volatile microeconomics environment at the moment. After the pandemic, we thought everything should be a little bit more easier, but the inflation is definitely a topic what we have to talk about. Like we see uncertain environments, we have a lot of changes in the because of the pandemic and health crisis. We have, after the pandemic, we have the geopolitical conflicts, energy crisis, climate change, inflation, cyber attacks, remote work. All of that is bringing uncertainty and constant change in our environment, which means that we have to react in the FP&A team to that. So what we need to see, we have external factors who used to play a small role in forecasting, a small role in the past. In forecasting today, they are front and center. So FX rates had always been a factor and companies watched interest rates, but for the last decade, interest rates for most of the developed world has been very low. We know that. And inflation had been an issue in some isolated countries, not globally. Now, many companies just used a simple assumption for these external drivers and did not use statistical modeling to understand how they impact the business. So when we look at the inflation rates, historical inflation rates, you see very low over the last years. Inflation rates in the US, for example, as most developed countries have rarely risen above 4% in the last 40 years. So the companies did not have to worry about inflation for a long time in most countries. So since the beginning of the pandemic, inflation rates have increased steadily to what are now their highest level in decades. The dramatic change in inflation combined with recent economic shocks mandates an immediate reassessment of strategy. So also the FP&A department has a topic with that. So companies have to have plans how to manage inflation in today's environment. So if we look at the historical inflation rates, that is something in April 2022, the IMF projected global inflation to be 5.7% in advanced economics and 8.7% in emerging markets. In July 2022, those figures were revised up to 6.6 and 9.5% respectively. So I'm coming from Germany, and the German inflation rates, I think in the last week were at 10% for the month. And it's still rising. I think it's on the rise because of the energy crisis. So we have to factor that in. So what we look at in inflation is now really a global concern. It's not anymore a concern of some countries in the world. So we had the things in Turkey and, for example, in Pakistan was the last year. But now these are just two examples. But now this is a global concern. If you look at the US, it is at the moment 5 times what it was in 2020. And 77% of the Americans said that they are moderately worried about being able to pay for back to school expenses. So that is definitely an interesting factor. And a lot of companies are very, very looking about their spendings and cash flow at the moment. So everything is a problem which would stay a long time with us, not only for a few months, and we have to factor that in. So the impact on finance and planning is number of forecasts has increased since the pandemic per the Association of Finance Professionals, the AFP, which is of course clear. It already has increased after the pandemic, since the pandemic, because only doing budget once a year is not anymore reasonable. So satisfaction in forecast increased from 54% to 39% in the 2002 FP&A trend survey. That's an interesting thing. Demand for integration of external data has increased per Deloitte CFO. Companies are keeping more short-term cash in the bank with all the uncertainty and increased need for coordination between business and FP&A to manage current risks. So that increased need to the ability to quickly model multiple business scenarios. And then we are here at the moment to talk about that. So, and when we look at the first question for our panelist, I also want to introduce now to you Ahmed Dawood. I think he's now with us. Please, Ahmed,
yes,
can you present yourself? Thank you.
Yes. Yeah. Thank you. Good morning, good afternoon, good evening, everyone. So my name is Ahmed Dawood. I am the CFO for the Middle East foods businesses for PepsiCo.
Thank you very much, Ahmed. It's very great to have you here. Thank you.
Thank you.
So
Thank you.
then let's start. Let's start directly into the first question which I have to you. We are, of course, having a lot of interesting topics now in FP&A, talking about FX rates, inflation rates, etc., which are influencing us. So how do you view the current macroeconomic market conditions in your respective regions? I think we have now the perfect mix between Adele and Ahmed about Middle East, Africa, and Asia Pacific. Let's start with Ahmed this time. Ahmed, so what is your view on the current macroeconomic market condition?
Yeah, so the situation is very much volatile. There are so many variables around. So in the Middle East, if you look at different countries, for example, the GCC countries, it is a bit different. The oil prices have big major impact on the way these countries operate and how it goes in future. If you look at countries like Egypt, for example, the situation is totally different than GCC. In a very simple note, GCC countries are having less hits from the overall macroeconomic situations, with some exceptions. The first important piece is the commodities inflation. It is hitting us across most of our GCC and Levant countries big time. Availability is becoming a concern. However, in general, there is more stable economic conditions, if I would say, specifically in the GCC, as opposed to the other Middle East countries like Egypt, Jordan, and some other countries.
Okay, thank you very much. So that is the conditions in Middle East Africa. So can we have your opinion as well, Adele, please?
Yeah, sure. I think in this region, Asia, right, I think growth in most countries in the region actually rebounded in the first half of 2022. But I think we all know China lost a lot of that momentum, right? I think in much of the region, domestic demand actually revived after, the waves of COVID-19. But of course, we know in China, the public health measures to contain outbreaks of COVID inhibited consumption. Whilst I think the region is still very cautious, there is projections that most of the regions actually projected to grow faster and have lower inflation, maybe in the later half of the year than other regions. I don't think growth is robust, but it's just that it's probably higher than the other regions. I think beyond 2022, certain factors could be a drag on growth. Perhaps maybe like global deceleration, where the global economic slowdown is likely to depress demand in these regions, exports of manufacturing and commodities. And at the same time, the weakening of the pandemic is reviving dormant tourism. The slowdown in major economies maybe could cut growth more this year in respect of the major APEC countries. We also, I'm also seeing that, rising debt and policy distortions are still happening. So current measures say to contain inflation and debt are adding to existing probably distortions in the markets for food, fuel and finance, probably in ways that could hurt growth. I think in each case, more efficient measures could address current difficulties without probably hurting longer-term objectives that the region has.
Okay, thank you very much. So there are some changes in all the regions, especially here, what we're talking about at the moment today in the Middle East and Asia Pacific. So the view on macroeconomic market conditions in your respective region, when I, as a German, can talk a little bit about Germany and Europe, that is as unbelievable hitting the industry, especially for me in Germany, because of the energy crisis, which I think it's very interesting situation in Europe, because of the situation that Russia is not delivering anymore the gas to Germany. So that is absolutely amazing how it increased the energy prices, and a lot of households in Germany, if the government is not supporting that, a lot of households in Germany will sometimes not be able to pay the energy prices anymore. And we have the situation that perhaps some of the companies are at the moment on the brink to getting bankrupt because of the situation that the energy prices are too high, and the prices for goods, etc., to use in the process of creating their own goods it's really very, very high at the moment. So very problematic. In addition to that the euro is under the parity to dollars. So a very interesting macroeconomic market conditions in Europe as well. And all the companies are at the moment looking how they are dealing with that and hopefully surviving this situation. So when we go to the next question, where I say it's how different is the process of planning and budgeting today compared to before the start of the pandemic, then I think it would be great, Adele, if you can give us your opinion to that.
Sure. I'm not sure whether it's really evolution stemming from the pandemic. I think definitely FP&A practices have definitely evolved as part of the bigger transformation journeys, right, that many companies are on. So I think specifically in planning and budgeting, or FP&A for short, I do see that, definitely, and I think many of the participants today will agree that your companies are being evaluated on more matrices than ever before, both quantitative and qualitative. And I think there's a big shift in the recent years that stakeholders, investors, shareholders, etc., are looking at non-financial KPIs to measure the performance of a company, right? I think a lot of that has now shifted to that. It's no longer just a matter of revenue and profits, but also the social and environmental impact of their decisions, right? And therefore, that's why ESG factors, ESG KPIs are definitely now more than ever required as a key KPI. And in the planning and budgeting process, that needs to be taken into consideration, right? And I think the challenge, of course, is that because a lot of this could be qualitative, it may be difficult to measure. And in my view, I think misfiring on any of these matrices can have an effect, right, on earnings, corporate reputation, and long-term value creation. Okay. The other thing I want to share in terms of how different is it today is that I mentioned how FP&A has now become more important in the entire finance transformation piece, right? And when I advise clients and provide consultations to them in terms of their entire finance transformation journey, and then going specifically just into FP&A, we do see, and companies do see, CFOs acknowledging that a target operating model for FP&A function is actually even required. So looking at the organizational structure, what is the right service delivery model to move FP&A into a more strategic and forward-looking function? FP&A skills, right? They do acknowledge that technology skills as opposed to accounting or compilation skills are now the greater skills related to improvement opportunity within the FP&A function. And then the last one I just want to share on is technology, right? The use of leading class integrated tools that would improve data quality and drive enhanced business insights. I'll leave it as that. I'll probably have a lot more to share and elaborate in respect of these three areas, right, that I mentioned in the later part of our conversation.
Okay, thank you very much, Adele. So also I think what we have experienced in the last months, especially here as Jedox, when we are working with our clients, is that the three key tools which are helping to adapt very quickly to and help to adapt in the FP&A area to the new environment. It's technology. So we are getting a lot of interest in AI and machine learning because it's clear that external drivers who need to be factored in and a lot of data we are only able to work with that when we are changing our technology, the way we are working in FP&A. So when I started, I don't know, 28 years ago, over 90% of the people were working with Excel as the foundation of their planning process. It's still more than 80%, which is amazing after 28 years now. But people are thinking about now how they would like to change the technology, taking an enterprise performance management platform into consideration, because they need to connect financial planning with operational planning, and that is only possible when you have the specific tools available. So we talk about when we talk about three tools, and you mentioned so we have business partnering, where the finance department is working with all the other departments in the organization to support them in their planning process, because all the operational part departments like HR, sales, etc., need to start planning, and this need to be connected to the financial plans. And then, of course, sensitivity and scenario planning is a big topic at the moment. So these three key tools are very, very important for this. It's very important to see how different the process is of planning and budgeting today compared to before the start of the pandemic. Ahmed, what do you think about the difference of the process now?
Yeah, I will not add much to what Adel has said. I like the concept she just mentioned on qual and quantitative. Just another dimension. In the past, we used to heavily rely on the internal factors within the organization. The external factors and the variables impact on our business planning and financial planning process was much less than what we have as we stand. So it is becoming more uncontrollable because of the external factors as opposed to the internal factors. We used to focus more on having fixed commodity prices with our suppliers, OPEX containment, OPEX management, and so on, and then we plan for our sales based on a specific seasonality. But now you cannot even predict that seasonality will go like what you used to have in the past. So the external variables are becoming really severe, and the frequency of the planning process is becoming really, really massive. So these are the key important additional points I wanted to add.
Okay, thank you. But so how do you see that if technology and scenario planning and business partnering can help in the process of planning and budgeting today?
Yeah, it's becoming a must, because no organization will be able to afford having traditional planners, as you just mentioned, sitting in front of their Excel sheets, predicting the external factors. So we have to have technology intervention, and we started already. But are we there? It's still a way to go. Yeah. Technology is becoming a must. Yeah.
Yeah, I'm always telling our customers that it's a journey. Yeah, so it's not a sprint, it's a marathon, and you have to exactly. when we adapt to the new planning and budgeting today. So one interesting question for me, so because it's all about the people who are working in the FP&A department. So how is it? That's an extra view from my side. So how has it changed? Or how you support your people in the process of planning and budgeting today to get to the new way of thinking and not anymore being part of the data collection and data reconciliation process, which should be done by the machine and technology, but being more part of the storytelling, etc. Is that anything or being part of how to understand what perhaps coming out of AI and machine learning? Is it how do you support these people? Is it trainings, running, or what is the process here in the company? Ahmed, can you?
Yeah. So I will take that. Very good question. So it will also differ from small, medium, and bigger size organizations. In our organization, we started to focus on having center of excellence on data and artificial intelligence, because we found out with the huge scale of our operations, we cannot rely on individual business units and market units developing their own centers to manage artificial intelligence, RPAs, and even data mining. So the key common model for the big organizations is to have center of excellence, for example, in Hyderabad in India, to focus on the emerging technology, starting from RPE, business processes, workflows, and ends with artificial intelligence and data mining and data science. We are relying heavily now on data analysis regression and machine technology and machine learning on the way we forecast for our cash flow, for example. But are we able to do so with all the variables we have as we stand? These are the key challenging questions we have. So we used to use the trends, the previous trends in order to predict the future. But the trends are changing big time as we stand. So that's exactly how we do it. So central hubs managing technologies, artificial intelligence for multi regions, and it is working well. However, the variables are really massive as we stand.
Okay, very good. Thank you very much, Ahmed. And Adele, is it something you have to support your customers when they have to switch from the old way of thinking to the new way? And are there training programs running which you're supporting, etc.?
Yeah. So I think for us in any kind of big consultancy project, there's always an approach and a methodology that we always deploy with regards to change management. And I think that's entirely very important, right? When taking on a new tool, taking on a new process, and changing the way in terms of how the team used to do that particular process, right? And what we see works, right, in a very successful implementations that we have done, is that we do see that where there is a creation of a champion, very similar to what Ahmad mentioned just now, that in his company, perhaps they have COE teams, Center of Excellence teams. And so for at least in this region, we do see what's powerful is that there will be champions of change. They are very receptive to take on new technology, new ways of working, and therefore will participate, say, for example, in the initial, let's say, example, proof of concepts that are trying to be rolled out, right? Either by consultants or whether it's internally. Then being able to champion that change amongst their fellow colleagues to then basically go out there and canvas and say that, hey, it works. Everyone should, be on board because it would save time for yourself, even soft factors like, you get to go home earlier, the team gets a lot more connected, right? Because of the ease and the flow of information. Then people get excited, and then that kind of leads, in my view, to that kind of successful change, especially if you need to take on something new in the planning and budgeting process that could be, in the past, a little bit more, if I can use the word, traditional.
Yeah, okay. Thank you very much, Adele. I think that is definitely an important topic and important point, how we are dealing with that and how we are adding this new way of thinking to the organization. Coming to the next question, what we have, especially, and this time I would like to ask you, Ahmed, what are the common concerns about the planning and budgeting process in the disruptive age that we live in? So what are you thinking about that?
Yeah, the common concerns is again uncertainty in our models. That's why it is becoming very critical to have many scenario planning and many scenarios and many sensitivity analysis, and this cannot be managed again the traditional way. So these are the key important or the key major concerns we have as we stand. So the manual planning process cannot live with us these days. So these are the key concerns. And as mentioned in the previous question, it is becoming really a must to have more connects to the external environment as opposed to the focus on the internal planning process. We need to have also very good insights, ad hoc insights, online insights on consumer trends, the moves of the commodity prices as mentioned, so many aspects. Also the governmental regulations in the countries where we operate as we stand in the Middle East. There are so many changes coming in, coming soon and in place as well. So how we can integrate all of this using a more advanced way of planning as opposed to the manual process.
Yeah. So like I said, the impact on finance and planning is the satisfaction in forecast decreased from 54% to 39% in 2022. Is that a topic in your organization as well? And the number of forecasts has increased since the pandemic. Did you increase since the pandemic the number of forecasts as well?
Yeah. I remember 2020 and 2021. We have so many scenarios. It was May when we started to hear about the VAT regulations, the changes in Saudi Arabia, and we had to do the whole planning process from scratch. And of course, one scenario didn't work. We had to do almost several 8 to 10 scenarios in order to reach to the optimal scenario. And after that, we came to 2021. Again, our budget didn't work after Q1, after we found out that there is a massive decline in our trends and top line. So the number of forecasts has led to massive effort and pressure on the team. And it led also to attrition as well. So many team members has left because of the pressure as well.
Okay, understood. Adele, any thoughts about the common concerns which your customers have in the planning and budgeting process?
Yes, so I think a lot of the challenges I think Ahmed had mentioned in terms of being able to do more agile forecasts, that's definitely it. I won't elaborate since I think Ahmed has gone into it. One other area that I probably want to cover is, and that I see a lot of challenges in my current clients, is the problem with data, right? Because we're dealing with large volumes of data, and currently now some companies are dealing with duplication of activities and manual tasks. You pointed out that people today are still using Excel spreadsheets, right? And as we know it, a significant amount of this FP&A data, of FP&A time is allocated to gathering, collecting, and validating the data, while only a smaller proportion of that time, which should be to be allocated to providing, analysis, value-added analysis, right? And so that large volume of data is a problem. And then how do you efficiently be able to manage this? I guess that's where some of the value propositions that are brought about of EPM tools like yourself kind of center around that. One other thing that I also want to talk from a data perspective is limited system integration, right? Issues that current clients I see have. And this may be rooted from perhaps outdated software that does not support leading practice processes, or inefficient data integration that could lead to reconciliation of disparate systems, or maybe even perhaps the systems being too slow because of inadequate data structure and ad hoc analysis. So in addition to what Ahmed mentioned just now, I think data is one big challenge that I see my clients are dealing with, because we're talking about expanded big groups, big geographical reaches, many different business units. You can imagine, setting up of these dimensions, as we know as an EPM term, becomes a lot more challenging.
Yeah, I must say I completely agree. So there a lot of our customers and what we think is that very important is exactly the data integration. You have to make sure that the time you are using to spending for data collection, cleansing the data, find patterns in the data, and the outliers in the data, and then reconcile the data was such a huge part of the time of an FP&A organization that if that can be taken over by a machine, and that is what we are working on, that is a big relief, and is refocusing the work of the FP&A team to what it should be. It's to see what is the the future and how to work in it with it. Yeah. We are a lot through the hour now, and I would like to remind all our participants if it would be good if you have some questions, please ask them. While we are live streaming, we have a Q&A session at the end, so please ask your questions if you have some for our panelists. That would be interesting to know, and please give it to us. So when we look at the last question which we have at the moment for our panelists is how two technologies consistently here to stay with finance professionals are the use of automatic and artificial intelligence. I already talked about that. So automation, Ahmed, you talked about RPA, but also we have in FP&A and in budgeting, planning, forecasting, a lot of process automation, data collection, but also workflows which are helping us to run faster through a forecast process, but also artificial intelligence. How do you see these two technologies reshaping the planning and budgeting process of companies in your region, especially automation and artificial intelligence? Adele?
Yeah, for sure. I think people do, or the FP&A organizations now do see that they definitely need a tool on board, right? Automation for sure, that you can pull various internal and external sources of data, perhaps maybe into dashboards that can help speed up the process and lessen the possibility of that human error that we talk about in moving away from manual collation. And then analytics software that can reveal data points that are essential for decision making, and data visualization tools that can help provide those actionable insights. And I particularly myself, when I work with other various EPM vendors, is that artificial intelligence or AI is definitely something that more and more companies are definitely more keen to explore and to apply in their models, really, because those predictive capabilities, right, of advanced analytics can then shape and aid them in certain predictions that you can then use as a base for the purposes of then flexing or doing your what if analysis from. It's extremely helpful because it's not then a case of having to do it on a line-by-line basis and a bottom-up. So I do see that quite being much appreciated, especially when some of my clients do long-range planning, where those predictive analytics, with the help of historical data that have been loaded into the tool, would help them a great deal.
Okay. Thank you very much, Adele. I think we will talk a lot about in the future about this automation, artificial intelligence. Like Ahmed, you have already mentioned RPA. Any other thoughts to that question regarding the two technologies and artificial intelligence? Are you thinking about using that? Or you think that already?
Nothing more to add. Sorry.
Okay. Good. Thank you very much.
Yeah, we are using that already. But to be very frank, we are very much. We're very much early in the journey to our earlier point.
Okay. One question which also came to my mind, Ahmed, is how do you track inflation and monitor price changes? This has become a key element of planning in your team. Ahmed? Can you hear me?
Sorry, Andreas, I couldn't hear you well.
Okay, so there's one question which came to my mind when you're talking about.
Sorry, Andreas, I couldn't hear you well. Can you repeat the question?
Yeah.
Hello?
Yeah. Can you hear me, Ahmed? Okay, Ahmed. At the moment, I think Ahmed, you cannot hear me. One question, perhaps to Adele. What can you say to how do you track?
Yes, I can.
Can you hear me now, Ahmed? Good. So Ahmed, so one question came to my mind is how to track inflation and monitor price, and how do you monitor price changes? This has become a key element of planning, or? Okay, there seemed to be a sound issue with Ahmed. Let's Adele, do you have some thoughts about that?
Well, it is not. I would say that that there's no one answer, right? I think that in my view, right, if to make your planning process or with regards to taking into account current environment, as you mentioned, inflation, on a real-time basis. I do see clients that would integrate, let's say, for example, their EPM tool with external sources of data that provide that kind of information. Whether it comes from, say, for example, their treasury teams or a treasury system that kind of tracks this type of, let's say, for example, interest rate movements that can then be integrated into the EPM for the purposes of doing that budgeting or planning or forecasting. Other than that, I think then, back to what, was discussed earlier on, really, staying connected amongst the business owners is really key. Because from there, then these type of information that can be then incorporated into your forecast and your budgets will be relevant when it comes from the people running the business.
Thank you. Thank you, Adele. Ahmed, are you back?
Yes, can you hear me?
Can you hear me? Yeah, I can hear you. Very good. Thank you very much. There was this question about how do you track inflation and how do you monitor price changes?
So there are so many techniques and tools. Andreas, just checking. Can you hear me?
Yes. Very good.
Great. So yeah, there are very common forecasting models using Reuters, Bloomberg, and Profitex. These are very common tools to look at inflation, commodity, and so on. It's very important also internally to analyze technical algorithms. What are the bear, what are the bull movements, the frequency of movements, as well as the extent of the movement, up or down, and how long it will last as well. It's very also important to really focus and analyze the big sudden movements as well, and how it is impacting our short-term and long-term positions with traders. So these are very common techniques when we talk about it. The last one I want also to consider and want everyone to consider also, it's very important to understand and be aware of the substitute movements of your commodities. What are the inverse proportions in your industry and the markets? These are very important techniques that we consider.
Thank you very much. Important thoughts. Yeah. Coming to the question which I have now for Adele is how to accelerate planning and budgeting process amidst unpredicted market disruption to better prepare and adapt current operations to new realities. What are your customers thinking about that?
Okay, so I think I kind of shared at the start, right, in terms of, as part of that bigger finance transformation, FP&A also needs to go through this transformation. So, we did talk a lot about technology being a big enabler in this FP&A process transformation. But, technology alone will not be the answer to that transformation. And you must consider in tandem with technology, your processes, as well as your organizational structure and roles, because really the FP&A organizations can drive improvement by focusing on, in my view, their organization, process, and technology. So maybe just let me deep dive a little bit in terms of organization, right, which is really a food for thought for people here who are really going to see how you can accelerate your planning and budgeting processes. Is that should you be developing a service delivery model and a blend of skills, right? So develop really a operating structure that will meet your business needs. So incorporate new sub-functions, say people like data scientists, innovation services, data engineers, to build and strengthen that analytical and decision-making services delivered by the FP&A function. And then continually update that structure to reflect the increasing leverage of technology. And just now we talked about some of these technologies, right? RPA, AI, even machine learning, automation. And one big thing I note that my clients are very appreciative as part of the FP&A process is having to be able to do self-service, right? That means call out specific reports, analysis that are very specific to the business user that needs to do a particular type of analysis, right? So I think really for me, how companies, if you haven't really thought about it, to really become better at this entire process, is to really think about whether you should relook at that operating model that you have that manages your FP&A processes, the people and the skills, and of course, without having saying technology.
Yeah, thank you very much, Adele. Ahmed, some last thoughts about this topic?
Yeah, so very good comment from Adel. Just one point to add. I have been into this journey of planning, forecasting, strategic planning as well since more than 20 years. The only thing I see happening or making an impact is to really have a dedicated resources to manage transformation. You cannot have your planning team managing the technology transformation agenda in order to have more advanced and agile planning team. And of course, it will depend on the size of the organization. Like I mentioned, in our organization, we have a dedicated COEs to manage the change, the data scientists, and so on. But if you have a medium, small size, make sure to have a dedicated resource to go and search for the new emerging technologies, the best practices. Otherwise, yes, you will make the change. However, it will not be impactful.
Yeah, thank you very much, Ahmed. There's also what we are working with is a kind of maturity model for different customers. We have customers, and like I said, I'm also think more than 20 years in that area. We have customers who are in the first stage, which we think it's automation and integration, though we want to make sure that they're integrating to all the data sources, they integrate to external resources, which give them the external drivers, etc., and then automate their budgeting planning process. So get away from the one tool which they are all using, which is Excel, to an automation. And this is the first, I would say, maturity level to automate and integrate the budgeting planning process. Then we have the second step of the maturity model, which is collaboration, which means out of the Office of Finance, you want to collaborate with all the different departments, with sales, HR, operations, production, IT, marketing, etc. And then the last maturity level is putting AI, machine learning, etc. on it. And you can start in all of these different maturity levels, but a lot of our customers, which are still on the Excel level, need to have the first automation and integration level done before they can move on to a collaboration or what we call augmentation and support, start to create or to get from a manual forecasting to an automated driver-based planning and forecasting process. Thank you very much for this interesting discussion which we had over the last 50 minutes. I want to come now to the Q&A session because our audience was very active and has sent a lot of questions, which I would like to, of course, some of them we want to answer. If we cannot get to all of them, we will answer the rest of the questions after our session. So in form of an email, etc. So one new question from Karim, and that is, what is the impact of current inflation to the procurement plans in terms of input costs and the prediction of customer consumption and demand? In other words, it is advised to build up inventory during the inflation or to apply just-in-time model. I think, Ahmed, that would be a question for you.
Yeah, good question, Karim, and very much in line with what is happening as we stand. So there is no right or wrong, Karim. It's all about which region we are operating at. For example, what is working in the Middle East, especially Saudi, it's more important not to have all the eggs in one basket. It's very important to push further for more sources and expanding our sourcing and geographies as well. This is very critical. And early bird catches the worm. So it's very important also for general commodities to know exactly when to lock deals and when to wait until further pricing updates. Localization versus globalization. So we used to rely on a couple of 2 or 3 countries for specific commodities. This is not happening as we stand. We started to think, as PepsiCo, we started to think of developing different suppliers in different locations and different countries other than the traditional ways of getting commodities. For example, we used to get wheat from specific countries. Now we have a very big chance to look for developing and investing heavily on developing local providers and growers within the Middle East, for example. So these are the key ones in mind. There are so many aspects. However, these are the ones I have top of mind as we stand.
Thank you. Adele, any thoughts from your side?
I think similar to Ahmad, I don't think there's a kind of right or wrong answer, right? But I think I think the key thing is that you build up a model with all sources of information being considered, right? So in inflation, in terms of then how it impacts demand, right? As long as I feel that there is a sound model, many a times, of course, right? If you use a tool, a lot of that modeling may be automated, putting in at best to me all the relevant inputs that you can get from all the business teams. And I think back to your point, Andreas, in terms of the teams having to be very connected, is in my view would probably be in that sense the most conservative manner in which you can then do to the best of your ability a sound kind of forecast at this point of time in terms of uncertainty.
Yeah, thank you, Adele. There's another question coming in from Sajat. In terms of, I think, Ahmed, also a very good question for a production environment. And any tips on how to account for these unprecedented issues like global supply chain disruptions while doing quarterly forecasts or annual budget? For example, the transportation expenses inbound and outbound for my organization literally quadrupled and really hurt the financials.
Yeah, so I will take this question on Sajid, and I have seen other questions talking about the approach as well. So we used to have less frequent reviews of our forecasting process. Now it is becoming a rolling forecast. So our key approach is rolling forecast and not a full-fledged rolling forecast. We don't start from revenue to bottom line each and every month and each and every week, if I would say. So we focus on specific items as mentioned in Sajid's question. So we focus on transportation, logistics, and we go and have deep dive forecasting process. On the one-offs, we keep a very, very close track of the one-offs, what exactly has happened. And that's exactly what I mentioned or what I meant when we said focus on more on the external environment and the external variables as opposed to internal variables. So the one-offs has to be very much analyzed separately and within your financial algorithm. And we do spend long time doing scenario analysis. What if? So what was the reason of this one-off? It was VAT last year. Do we expect any further VAT discussions? We go and have dialogues also with the government as well. So the historical one-offs can give you a very good indication on what can happen in future as well. Don't take it just as a simple financial exercise. You have a very high one-offs in the base, so next year you will get the benefit, or vice versa. No, analyze them. Look at the historical trends on the anomalies as well. This is very important, Sajid and the rest of the team to consider as well in your planning and forecasting process.
Okay, and also Sajid asked a question. During the COVID era, the organization were really hit hard by one-off costs, which may not repeat again, but you never know. We may experience some of another one-off hits in the future. So how to account realistically for these types of costs while doing budgets or forecasts?
Ahmed? So that's exactly what I mentioned with, that's exactly with what I mentioned with keep close track of the one-offs. The PepsiCo Group, the global team has developed specific reporting tools for the one-offs in relation to pandemic and others. And these one-offs are being analyzed maybe every quarter, if not every month. So we consider some sort of risk, very simple risk assessment and situational analysis of what can happen in future and what cannot. That's exactly what we do.
Perfect. Thank you very much. The last question here from the panel, which we have, and I think that is, I would like to give to Adele, is how to motivate teams across organizations so that they take ownership and be part of a creative budgeting and planning process. So how do you work with your customers on that?
Okay. So I think I mentioned earlier that, what I see has worked in terms of a successful implementation that I've done is that that change management and the buy-in from everyone is key, right? And I do see that champions, as I mentioned earlier, I think Ahmed also mentioned setting up of Center of Excellence teams are very helpful, right? And therefore, with that, on a ongoing basis, there will always be, the motivation to want to share best practices, right? Come back with learning points. Everyone learns from each other, and then that model that you're trying to build, or the models that you're trying to build, will continuously improve, right? I think we do see teams that, on day one, if you do have those challenges, everyone needs to understand that it is a continuous improvement process.
Yeah, I think also the buying from the top level is very important, and the support to keep that change process running and to support the people who are doing the budgeting planning process. Yes. We have another question from Fazi, and this is for Ahmed. These days, there is a lot of volatility in exchange rates. We already saw that in the slides which we presented at the beginning, particularly with some specific countries. So how do you manage a realistic forecast in this kind of situation?
Yeah, Fasih had we have a couple of dimensions, two main dimensions when we talk about foreign currency exchange. The first one is the transaction forex and translation. So translation is out of our hand. On the transaction forex in our countries, I can guess that you are from India or Pakistan. We have very high inflation in Pakistan, for example, and it is very important to have top of your mind the sensitivity analysis of the impact of 10 cents or 1 cent on your commodities and OPEX. This is very critical. So every day when I look at the Forex map, I can easily imagine or predict how much this will impact my P&L. And in order to be able to plan well for that, we go and spend a good time with your procurement team, how we can transfer part of this risk and how we can partially mitigate this risk in your contracts with the commodity suppliers. This is very critical. So these are the key important tips I have in mind when it comes to Forex exchange rate.
Thank you very much. Interesting support for this question and interesting answer, especially in these days. So that is, I think, everything. We are coming to an end, the Q&A session. 1 hour is almost over. I would like to thank you very much, Ahmed, for joining us and giving your perspective about the way how you're dealing with that situation we are in at the moment. And thank you very much, Adele, for joining the panelists as well to give us the view from also a financial service provider for their customers. It was great talking to you, and I hope you will see us again very soon. And thanks everybody who is joining that session. If you have any questions, please let us know. Also after that, we are more than happy to answer that. And have a nice day wherever you are in this world.
Thank you,
Andreas, for leading this. Thank you.
Thank you.
Thank you, Andres. Thank you, Ahmed. And thank you, Adele, for sharing these great insights indeed, and for being so generous with your time today. Just a quick reminder to look out for an email within the next 2 hours with links to download today's materials. And in addition, I would like to mention that Jedox works with companies around the world to help streamline their budgeting, forecasting, and planning processes. And if you would like to learn more how it can be done for your company, you can book a meeting directly with our webinar host, Andreas, or request a Jedox demo through We Just Book a Meeting and Request Demo. We'd also like your feedback, so if you could take a minute to answer our very brief survey that will pop up on your screen at the end of the session, that would be very much appreciated. On behalf of Jedox and Marcus 7's webinars, we would like to thank you all for joining us today, and we do hope that you will be listening in at our next webinars. Thank you. Have a great day, everyone.
Thank you very much. Bye-bye.
Bye.